We'd be remiss if we didn't tell you about a couple of key connections that Form W-2 has with another standard form, Form W-4, and your last pay statement of the year. When you start a new job, you fill out Form W-4, the Employee's Withholding Certificate. This tells your employer how much tax to take from your paychecks. Then, your W-2 displays what actually happened with your pay and taxes over the year, based on what you put on your W-4. Form W-4s are essential for accurate payroll processing and tax reporting. If you get a very big tax refund or end up owing a lot of tax, you might want to change your W-4 for next year. This can help make your tax situation more balanced. Did you know that you can use the year-to-date balances on your final pay statement to make sure your W-2 is accurate? Your final pay statement of the calendar year contains the information you need to determine the data that should appear on your W-2. Let's look at an example. On January 20th, Jackie receives a Form W-2 from their employer. Let's compare their last pay statement with their W-2 for accuracy. Watch as we go through the boxes on Form W-2 to see how the amounts were calculated. Box 1 displays the wages subject to federal income tax. By looking at Jackie's last pay statement of the year, we see that their annual salary is $50,000. But if we look at Box 1 on their W-2, only $47,480 of that $50,000 is subject to federal tax. Why the discrepancy? The amount in Box 1 is lower than their annual salary because Jackie had health plan premiums deducted as well as pre-tax deductions for a 401k plan. Both of these amounts reduce their taxable wages, which means Jackie does not have to pay federal income tax on the portion of their salary used towards covering these costs. Therefore, Jackie's Box 1 is calculated by taking the total gross earnings minus the health plan premiums and minus the 401k contributions. Boxes 3 and 5, Social Security and Medicare wages. These boxes display the wages subject to Social Security tax, Box 3, and Medicare tax, Box 5. For Jackie, whose annual salary is $50,000, both boxes show $48,680. Only health plan premiums reduce the taxable wages for both Social Security and Medicare. 401k contributions do not reduce taxable wages for either. Both boxes are calculated the same way, total gross wages minus health plan premiums. The reason for the difference between Jackie's annual salary, $50,000, and the amount in these boxes, $48,680, is the deduction of health plan premiums. Boxes 2, 4, and 6. Box 2 displays the total amount of federal tax withheld from Jackie's pay during the calendar year. Box 4 displays the total amount of Social Security tax withheld from Jackie's pay during the calendar year. Employees are responsible for paying 6.2% of their gross wages to Social Security. Box 6 displays the total amount of Medicare tax withheld from Jackie's pay during the calendar year. Employees are responsible for paying 1.45% of their gross wages to Medicare. Box 12 displays a variety of items, such as fringe benefits and retirement plans, along with the appropriate IRS code. Jackie's pre-tax 401k plan contributions for the year will appear here with the code D. Note, Code D tells the IRS that her contributions were to a 401k plan and made on a pre-tax basis. There are designated codes for the different plan types, as well as for the various fringe benefits. These codes are listed on the back of one of your W-2 copies provided by your employer. Looks like Jackie's W-2 is accurate, and now she has all she needs to prepare for filing her taxes this year.